Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Saturday, the 27th of January, 2007, and let's go ahead and take a look at some stocks for trading on Monday. I've got shares of Internet Capital Group on the screen, symbol ICGE, and this stock has just recently, this week, during some market weakness, broken out to actually multi-year highs here if you take a look at this weekly time frame. In fact, to get a look at where this stock has the potential to go, we've got to look at a monthly time frame, and I had to change the scaling in here because you can see that the stock was significantly higher and then really got beaten down. It's been doing a whole bunch of nothing for the last 3-4 years, and now it looks as though this first move on the monthly time frame occurred back here in August, or rather September, and now it looks like it's ready for another push higher again. So in order to come up with a price target, first of all, near $12.20, we've got to look way back to 2003. So our price objective here is going to be $12.20. What I'd like to see happen would be for the stock to pull back to $11.05, and just because it had this little run late in the day, and then to buy it on strength above $11.10. Our stop would go at $10.87, below that afternoon low right there. And that will give us a risk of about 23 cents for the opportunity, if it makes up to that 12.20 level, to make $1.20 in shares of ICGE. Next up, we're going to look at a biotech company called Enzon Pharmaceuticals, symbol ENZN. Let's take a look at that daily time frame first, and you can see here that this stock also experienced a nice breakout on Wednesday on heavy volume. It pulled back on light volume on Thursday, and then we had some really big volume on Friday. I'm going to show you that in a minute. Let's take a look first at what I think the potential upside target is. As far as the upside goes, initially we're going to look for $9.30 a share, and I think though that it could probably go higher than that. So $9.30 is our price objective. So that'd be, if we look at it now, here is how I'd like to purchase it. I'd like to purchase the stock above $8.78. Let's look at a 1-minute time frame and show you why. You can see we had some real big volume on these two bars right here. Now the high there was $8.75. So something happened in here. It traded about 2.5 million shares during those 2 minutes. Now if the buyers are truly going to take control, I think that getting above $8.78 is where we want to purchase this stock. That'll confirm that that volume is below the market and could act as support rather than buying it as the stock is below that level where that big volume changed hands. So I want to purchase this stock above $8.78. A stop, I think, could go at $8.65. There's not much reason to risk anything below this level right in here. So that would give us 13 cents of risk for the potential upside of 50 cents in shares of ICGE. I'm going to save one other small stock on the long side after we take a look at some shorts. And as Tom pointed out, I like to pick on Boom, and Boom is dynamic materials, of course. The stock is maybe finding some resistance in this area. We were looking for an entry on Friday below $27.20. That didn't occur. I still think that $27.20 is where the sellers ought to take control of the short term. So let's look to sell the stock short below $27.20. You can put a stop up at $27.55. So that's just 35 cents of risk. And I still think this stock has the potential to make it down towards $26 a share. Probably even lower, but we'll make 26 our official target. That will give us $1.20 of potential upside for just 35 cents of risk. Another short sale candidate would be Network Appliance, symbol NTAP. And here on the daily time frame, you can see that it broke down through some important support in here. It's been tested on light volume, and now looks like the stock is heading lower once again. So on NTAP, I'd like to sell this stock short below $36.65. A stop could go above Friday afternoon's consolidation high, so we can put our stop at $37.03. That will give us 38 cents of risk, and I think the stock is likely to drop down towards this 200-day moving average and test that at $35.50. That will give us $1.15 of potential upside for 38 cents of risk. Last stock I want to talk about is shares of SIGA Technologies. We got involved in this one way back in here. And caught that gap, and we've looked at it a couple times, but now I think the stock's coming back together. You can see it keeps coming up on big volume, so there's some net accumulation, I think, in here, and it's holding above the 10, 20, and 50-day moving averages. That 10 days is about to cross back up through the 20, and it looks like a nice low volume consolidation in here recently. There's a little bit of resistance, or there has been a little bit of resistance up near about $3.80. So I think moving above $3.80. By the way, I did buy a small position in the stock on Friday, so I do own some, just for disclosure purposes. But I think I'll add to it above $3.80. Above $3.80, the buyers take control in my mind, and I think that stop could go down at $3.68. So that would just give us about 12 cents of risk, and I think the stock has the potential to make it up towards about $4.50 a share. So the risk is, again, about 12 cents, and the upside opportunity is about 70 cents in shares of SIGA.